Have you ever wondered what would happen if other countries suddenly started selling off US Treasury bonds? It might sound like just another financial headline, but it has real effects on our wallets, our economy, and America's place in the world. Let's break it down. What are US Treasuries? US Treasury bonds are basically IOUs from the US government. When countries like China, Japan, or Saudi Arabia buy them, they are effectively lending money to the US. In return, the US promises to pay them back with interest. For decades, foreign countries have loved treasuries because they're considered one of the safest investments on the planet. What happens if they sell? But what happens if those countries start selling them off? The first thing to consider is supply and demand. When a ton of bonds flood the market, prices of those bonds fall. And when bond prices fall, their yields, or interest rates, rise. Impact on the US government. That means it suddenly gets more expensive for the US government to borrow money. Remember, Washington borrows trillions to pay for everything from Social Security to the military. Higher borrowing costs mean bigger interest payments, and that money comes straight out of taxpayer pockets. Impact on Americans at home. But it's not just the government. When Treasury rates rise, so do interest rates across the economy. That means higher mortgage rates, more expensive car loans, and bigger credit card bills for ordinary Americans. The dollar and global trade. A massive sell-off can also shake confidence in the US dollar. Since the dollar is the world's reserve currency, countries rely on it for trade. If foreign investors doubt the stability of US debt, the dollar could weaken. Imports would get more expensive, pushing up inflation right here at home. Market reaction. And of course, Wall Street would feel it too. Rising interest rates typically drag down stock prices, especially in the tech and housing sectors. Investors would run for cover and volatility would spike. Why it might not happen overnight. Now, before you panic, here's the catch. Other countries own treasuries because they want to. They're safe, they're liquid, and selling them too fast would actually hurt those countries because the value of their own holdings would drop. So while gradual reductions can happen, a full-scale fire sale is unlikely. Conclusion. So, if other countries sold off US Treasury bonds, it would mean higher borrowing costs for the government, higher interest rates for Americans, pressure on the dollar, and a bumpy ride for the markets. It wouldn't be the end of the world, but it could definitely make life more expensive for all of us. If you found this breakdown helpful, hit that like button, subscribe, and let me know in the comments. Do you think foreign countries will ever actually dump US debt? Thanks for watching Economic Now.